Now, the Reserve Bank could keep interest rates on hold at 3.6%. That would be the first cash rate hold since April of last year. Joining me is our business reporter, Edward Boyd. Ed, economists are split.
Economists are split. This is actually going to be quite a difficult call for all of them today. No one is really sure what the Reserve Bank is going to do. We can put up the predictions here from the big four bank economists. You can see split down the middle, 50-50. CBA, Westpac think it'll be a hold. ANZ and NAB think rates will be rising by 25 basis points today. Why would the Reserve Bank want to keep interest rates on hold today? Well, they'd look at the economy, they'd say retail sales are starting to slow down. We're starting to see an impact of those 10 consecutive rate rises on consumer spending. We're also starting to see inflation slowly come down. So the theory is they keep interest rates on hold this afternoon and then have a whole month to observe the economy for another 4 weeks, and then potentially in May, they may need to raise rates one more time to 3.85%, because a lot of economists believe 3.85 or 4.1% is going to be the peak of the cash rate in Australia, and then it's going to start going down at the end of this year or early next year.
Ed, it will not be a popular decision, but what's encouraging the RBA to lift rates today?
Look, the big thing encouraging the RBA to hike rates today by 25 basis points is that inflation number. So look, it is coming down, but it's not coming down quickly enough for a lot of economists out there. This is what happens if rates do go up by 25 basis points today. For a $500,000 loan, it's another $78 a month in repayments, but cumulatively, it's 11 cash rate rises. So it's actually $1,000 and almost $60 extra per month that a person paying off $500,000 needs to find. And that obviously doubles substantially for a $1 million loan. So really, it's all about inflation. It was the monthly inflation rate was 8.4% in December. It fell to 6.8% in February. The Reserve Bank thinks it's going to get to roughly 5% by the end of this year, but that's still way too high for our economy because inflation, it's close to 7% at the moment. It's still really, really high. I think the RBA should lift rates today to really crunch inflation down and get it back down to levels that we want, because right now it's pretty unsustainable in our economy having inflation at this level. So that's the theory for why they should keep lifting rates today at least. So it's going to be a big call from the Governor, Philip Lowe, and then he has a chance to explain his decision tomorrow when he addresses the National Press Club in Sydney.
Yeah, looking forward to that. He'll probably point out that it's not just his decision, but the whole board as well.
The whole board, yes.
Okay, we'll see you